Ladies and gentlemen, good day and welcome to HG Infra Engineering Q1 FY2024 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Seema. Good afternoon, everybody, and welcome to HG Infra Engineering Limited earnings call to discuss the Q1 FY24 results. We have on the call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Yeah, thank you, Sana. Good afternoon, ladies and gentlemen. A very warm welcome to the Q1 FY24 earnings conference call of HG Infra Engineering Limited. We are pleased to welcome you all here today to share the highlights of our quarterly performance, achievements, and our vision for the future. I hope all of you have had the opportunity to review the investors' presentation and the financial results, which has been made available on the exchange. The entire country is drenched with the heavy rains, and overall, it is much more than expected despite of all these abnormal prolonged, which has affected the sector overall. We have been able to meet our expected numbers, though it was slightly less than our expected targets of this quarter. At the same time, we are working on the strategies, priorities to overcome these challenges. Performance, quality consciousness, and safety measures remain our key element in our success story, which is deep-rooted in all our activities. As a sector, we have firm belief that the government is expected to continue with its thrust on the infrastructure sector, a lion's share of which would be towards the road, highways, and railway sector. Considering the highest budget overlay in these sectors and the new initiatives being taken to support the project completion on time. There has been lukewarm bidding in the first phase, but in the next quarter it will propel and to cover the targeted numbers. Let me start the growth journey of this quarter and give you the glimpse of the operational highlights first. For quarter ended June 2023, our order book stands at 11,674 crore rupees, which have established our presence across 11 states, with the EPC segment comprising of 53%, and the HAM segment constituting the remaining 47%. There are the updates on the ongoing projects. Talking of the EPC projects, the Ganga Express project has achieved approximately 23.5% completion. The project is running well in the time as per the contract timelines. In Delhi UER project, we have made significant progress of around 65.8% and it is expected to be completed by December 23. The Neel Bangla Tungur project is progressing well and has reached an execution status of 10.6%. The progress of various HAM projects is also looking good and moving ahead as per the planned schedule. Below is an update on the same. Progress of total execution of package 5 of Raipur-Visakhapatnam Odisha OD5 stands at 43.6% completion. Package number 6 of Raipur-Visakhapatnam Odisha project OD6, it is at 46.3%. Again, in AP1 of Raipur-Visakhapatnam corridor, it has reached the completion status of 46.7%. At Khammam-Devarapalle package project 1, we have already achieved 16.3% completion, while in package 2 of Khammam-Devarapalle, we have reached 24.4% completion. For Rewari bypass, we have applied the PCOD as the project is nearly in completion stage and we are expected to receive it soon. As you know, we have established our footprints in our order book with the diversification and successfully ventured into the railway and metro sector. I would like to touch the progress of these projects. We have completed 13% of DMRC metro projects. Execution of this project is going well on track and will be completed as per the contract timeline. The Bilaspur Himachal Pradesh Railway project of RVNL, where we have recently received the appointed date, is progressing well. And the Kanpur Railway Station project, the mobilization is going on a very fast track. Let me now share other significant updates. We have received COD of Maharashtra package 1, 2 and 3 of mode. In this quarter, although we have received PCOD of these packages after 2020, LOA of Kanpur Railway Station and small project of NTPC has been received on 5th June 2023 and 23rd May 2023, respectively. Apart from this, we have also received the appointed date of RVNL rail projects on 24th May 2023. For our 3 new HAM projects, namely Varanasi-Ranchi-Kolkata Expressway, package number 10 and 13, and Concall projects, financial closure is expected to be completed in August 23, and the appointed date will be received in quarter 2 and quarter 3, respectively. In Concall Ring Road, the land availability is around 86%, and at Jharkhand package number 13 of Varanasi-Kolkata Expressway, it is around 50%. Coming to the financial highlights of this quarter, at the standalone level, in Q1 FY24, the standalone revenue reached at 1,271.3 crores, indicating a notable 19.3% year-on-year growth from 1,065.7 crores recorded in Q1 FY23. The standalone EBITDA of Q1 FY24 was 204.8 crores, reflecting a year-on-year growth of 26%. The PAT and the PAT margin for Q1 FY24 stood at 9.3% and rupees 118.4 crores. That is compared to 9.2% and 97.6 crores last year. PAT grew by 21.3% in Q1 FY24 on a year-on-year basis. Regarding the company's debt position on a standalone basis, the gross debt amounting to rupees 665.2 crores, which includes the working capital debt of 178.6 crores, term loan and current maturity along with the trade limit totaling 389.6 crores, and the NCD of 97 crores. Moving on to the consolidated numbers, during Q1 FY24, the consolidated revenue surged to 1,351.2 crore, marking a 22.2% year-on-year growth compared to rupees 1,105.9 crore recorded in Q1 FY23. At the consolidated level, the EBITDA of Q1 FY24 was rupees 280.7 crore, displaying a robust year-on-year growth of 41.1%. The PAT margin for Q1 FY24 consolidated stood at 11.1%, resulting in a PAT of rupees 150.4 crore as compared to rupees 109.4 crore in Q1 FY23. This represents a significant growth of 37.4% in PAT on a year-on-year. At the consolidated level, the gross debt amount is amounting to rupees 2,131.2 crore. The total equity requirement for the 12 HAM projects is estimated to be rupees 1,592.6 crores, and that is until FY26. As of March 23, rupees 758.7 crore has already been invested, and there is a projected investment of rupees 407.4 crore in this financial year FY24. Progress update on monetization of 4 assets is as under. Last quarter, we have signed share purchase agreement of 4 HAM projects with Highway Infrastructure Trust backed by KKR. We are awaiting some procedural approvals to close the transaction. We have received lender's approval for 2 SPVs and approval of 3rd SPV, that is Gurgaon Sona, in principle is expected by 10th of August. Other condition precedents are either completed or at an advanced stage of compliance. The final approval from NHAI is targeted by 31st of August 2023. Post receipt of NHAI final approval, we will proceed for the completion of transaction, including the transfer of shares and receipt of the consideration till 30th September 2023. For the fourth HAM project, that is Rewari Bypass Package 4, approval process will be intimated as a second tranche will be initiated in December 23 quarter, that is post COD of Rewari Bypass. We are optimistic that we would be able to complete this transaction well within the time, and we do not see any challenges in the current scenario. Before I end my speech, let me be assured that we would be able to meet our expected numbers of growth with 20-25% upside in the revenue, and we would bring momentum in the order inflow with the new projects in the tune of 7,000 to 8,000 crores this year. We are working minutely on the operational efficiency and executional capabilities to add every penny to our EBITDA and PAT margin. Digital transformation remains on our priority, from automation in the plant and machinery, operations, and other vehicles, which will add a lot of value in our financial indicators with a seamless and transparent real-time working environment. That is all from my side. We can now open the floor for the question answers. Thank you.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Shravan Shah from Dolat Capital. Please go ahead, sir.
Thank you, sir, and congratulations to the team for the robust performance for this quarter. So the first question is just to reconfirm the guidance what we have spoken in the last Concall. So on the top line front, we are maintaining the 5,500, 5,600 crore revenue for this year. And in terms of the margin, 16%, and order inflow, you mentioned 7,000 to 8,000 crore, but last time it was 8,000 to 9,000 crore, and in annual report also we mentioned 8,000 to 9,000 crore. So can you just reconfirm the numbers?
Of course, I think as we have already done about 20% this quarter on a year, we can see this because of some monsoon early arrival because of this Biparjoy, and that has impacted some of the progress in the project. But definitely we are on very much focused on that we will be touching upon this 22-20%, 25% progress. That is where we will be reaching up to 4,500. And because the order guidance has been reduced by 1,000 crore rupees, because we have seen that there has been some delay in the awarding of the project at NHAI and say few other clients. So that is how we are keeping the 7,000 to 8,000. Margins definitely will likely to remain intact as we have seen into our numbers. So that seems to be the same range of 16% plus only.
Okay. And in terms of the breakup of the revenue, last time we said 2,000 crore revenue from Ganga Expressway, 1,800 crore from existing HAM, 100 from the new HAM. So if you can also help us with if any change in that number, or if it is same, then it is fine.
No, it is more or less same, because in the quarter we have done about 500 crores from the all HAM projects, that are majorly 5 HAM projects rather. And in this project of Ganga Expressway, we have done this 475 odd crore rupees coming from this project of Adani Ganga Expressway, other NHAI, EPC and DMRC put together. So we are very much clear on that the SPV and Ganga Expressway and the other NHAI EPC projects are the major contributors would be the major contributors to this particular year revenue.
Okay, and the inflow front, broadly how much 5,000 crore would be from the HAM, and in terms of the new, other than the road sector, we were looking at close to 2,000 odd crore. Will it remain the same?
Yes, so more or less same, because the 1,000 odd crore rupee we have just taken it as a guidance for this year, just keeping that almost 4 months has passed. But then again, it remains the same.
Okay. And sir, just want to clarify, in annual report we have mentioned that we are looking at 10 revenue in 3 years. So just to clarify, so that 3 years starts from and.
Shravan, sorry, I couldn't understand your question. Please repeat it.
I just want to clarify, in annual report we have mentioned 10,000 crore revenue.
I'm sorry, sir, your voice is breaking up. You're losing your audio in between.
Is it fine now?
Please go ahead.
Yeah. Sir, I was saying in annual report we have mentioned that we want to achieve a 10,000 crore revenue over next 3 years. So I think this 3 years should start from FY25 end up from the FY25 onwards. Otherwise, if sorry, sir.
So this year it is 24. This is a running year. We are not considering this year, so it can be post 25, 3 years down the line.
Okay, yeah, because otherwise the CAGR is much higher versus normal what we are talking 20-25% revenue growth CAGR. So that's why I just wanted to reconfirm. Secondly, in terms of the appointed date, you said that both this Varanasi, we will be getting appointed date in October, December Q3, and for Karnal Ring Road, it would when we are getting the EP appointed date. And
see, Karnal Ring Road, we are already about to submit our financial closure documents, and by September mid we would be getting the appointed date. Jharkhand package 13 would be a bit early in quarter 3 end, and definitely followed by this Jharkhand package 10, quarter 4 in January, to be more precise.
Oh, Kanpur railway station, it would be by this month we will be getting the appointed date.
In this quarter 2 only.
Okay. And if you can.
May we request you to join the question queue, sir? We have several participants waiting for their turn.
Okay, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. We take the next question from the line of Mr. Parikshit Kandapal from HDFC Securities. Please go ahead, sir.
Yes, sir. Hi. Congratulations on a decent quarter. My question is on the monetization part. So when do we expect all the approvals to come in? I see you said NHAI will give approvals in August 10. And when do we expect the money to come?
Parikshit, your voice is not so clear.
Hello. Is it better now, sir?
Yeah, now it's okay. Yeah.
So I was asking, sir, you on what stage of approvals or are we for these assets which have been monetized with KKR? So I think you said that by month end NHAI approval will come in. So when do we expect the money's final inflow to come in?
See, out of 3 projects which we already have completed, that COD is done. So 2 projects have already been sent to their finance department from the operational technical division. Just 1 project within this week is likely to be sent to them. And finance department hardly take normally 7 to 10 days for issuance of this in-principle approval. So this is first stage of NHAI. And post that, the entire formality of put together NOC from all the lenders, and this again they will be sent to NHAI. So it is a bit delayed, rather about 1 month delay because of some of the changes at NHAI. But then we are hoping that it's not during the September quarter, but in quarter 1, October, we would be getting the funds for these 3 projects.
So what I was also hearing is that there has been quite some delay now by NHAI giving new approvals or NOCs. There has been a queue of approvals which is still not being given. That's why I was asking this question. That are you
That was very much on the cards, but because of the recent changes some of the transfers, say some of the position changes, that is a delay. Eventually, it's not that, but because it was never in the control. The things are moving well on track.
Okay. Because I was asking this question was that earlier, we have done deal with KKR and in the past they had faced similar issue, and that earlier deal got called off with one of your competitors. So just referring to that now, that whether the timelines and whether the process have become more streamlined in terms of NOCs and approvals coming in from NHAI.
They are putting their sincere efforts along with us for getting this transaction done.
Okay, so my second question is on the bid pipeline. If you can help us understand the rest of the year. We do understand that even L&T was saying that the fourth quarter will be mostly model code of conduct and nothing much will happen in terms of awarding. So from now onwards, August onwards, we hardly have 4 months left. So how do you think that we'll end up this year? What is the bid pipeline from different agencies or associations like NHAI? What is the bid pipeline, railways, and also water? So what are we targeting for the rest of the 4-5 months?
Definitely, as 4 months is vast, but as they have guided various times that there's 1,000 odd kilometers to be awarded this year. So, but it's not so easy. So we are also keeping that our target, in-house target, that they definitely, if they are in a position to able to award even 4,000 odd kilometers, then we are keeping that at least some 4,000 to 5,000 crores of project coming from NHAI and balance from MSRDC and other sectors.
Okay. Have we please bid for the Pune Ring Road and have we participated in that tender?
Sorry?
The Pune Ring Road tender, have we participated in that tender?
Yeah, we have already applied for the RFQ, and very soon I think they are going to declare the results of RFQ. Post that, the price bid is to be quoted or bidded.
October or November, I think it will be. So when do we expect the awards to happen?
Probably by October or say by November, definitely they are looking to award this project.
Okay. This is the last question on the station redevelopment, sir. Are we looking at that as an opportunity to bid? So in terms of railways capex, so I understand right now we are more on maybe metro side and maybe track link. So what are the capabilities there, and whether in terms of value chain, how are we upgrading ourselves so that we can cover more broader spectrum of awarding from railways?
Railway, definitely there are many projects which we have already recently bidded. So there are of that nature only where the permanent track linking or those kind of works are all included. So they are having many projects in their pipeline. We have in Maharashtra and Gujarat or in UP also. We have seen those projects. So for sure, I think the railway opportunities are coming in a very significant way.
Okay. But our scope will be largely related to track link and overhead chain also, not and maybe metro.
With the kind of a joint venture, not really required joint ventures, with MOU basis where we are aligned with any of the associates for this track linking. It's permanent work.
Station redevelopment, anything we can do there?
I'm sorry to interrupt, Mr. Kandapal. May we request you to join the
question? It's already there. There are many projects in that pipeline.
But are we participating in that? That's the last question. Are we looking to participate in station?
Yes, we will be keep continuing bidding in these kind of stations also.
Okay. Thank you.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handsets while asking a question. We take the next question from the line of Mr. Chinmay Kabra from MK Global. Please go ahead, sir.
Hi, sir. I just wanted to know one thing. In terms of Rewari bypass, has there been any modification in the contract? Because the percentage of completion, it has changed from Q4 FY23 to Q1 FY24, what I see right now.
What you are saying is 96% already has been completed.
Yeah, so I mean, what I was unable to understand was 94% is what was showing in Q4 FY23, and I think if I'm not wrong, in Q1 FY24 it is showing 86.5%. So just
there is some error. I think there is two more errors are there because of I think they are getting it corrected because in two of the projects of this RVNL and Bilaspur and as well as Kanpur railway station, the percentage progress has been quoted, which is wrongly. Now it is going to be corrected.
So there's no change in the contract or anything like that, right?
Yes.
All right. And other than this, sir, just wanted your perspective on, again, I just wanted to reconfirm the guidance that the FY24 revenue, which we have said 5,500 to 5,600 crore and the EBITDA margin of 16%. I just wanted to reconfirm the order inflow guidance which you have given, sir. If you could please just restate that again.
Yes, so 7,000 to 8,000 odd crore rupees we are targeting to add this year.
Understood. And of this, how much are we expecting to be from the other projects in terms of railways and metros?
So we are looking at about 2,000 odd crore rupees to be added from these other sectors other than highways.
Sectors. Understood. But, since we are being conservative and we are thinking, we are just assuming that NHAI might just do 6,000 kilometers to 4,000 kilometers, are we still confident in order to achieve these order inflow targets that we have set?
Yes, of course. I think it's not a big challenge. This that we also have seen the last 2 years, what we have planned, and roughly we would be able to achieve that. And God is always there, so we would be able to add this number.
All right, sir. Yeah, those are my questions. Thank you. Yeah.
Thank you. We take the next question from the line of Ms. Ankita Shah from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, wanted to understand about the working capital cycle. The debt on account of working capital requirement has increased. So, is this on account of certain projects or reason for the increase in working capital requirement?
See, is it this you are talking about the working capital days or net or working capital requirement?
Requirement. If I look at the debt breakup, then the requirement of working capital has gone up.
Definitely. Now I'm clear about it. So the working capital utilization has gone high at this absolute as we are talking of 30th of June. But then again within 7 days it is now coming back to the same range of 500 crore rupees. This is because of a specific reason that the payments which we are likely to get from SPV and even Adani and one more NHAI client. So it got delayed for a few days, just 2-3 days. So that's why it's just a week or 10 days time it shoots up to that level. But otherwise it would be in the same range only.
Okay, good. And so second question is on the RVNL project, Manipali Bilaspur. What is the margins that we make in this project and how are the payments?
The payments definitely as RVNL is the public sector undertaking, the payments are likely to be very much on track only. There's no issue as such as far as RVNL, metro or railway projects are concerned. But definitely the margins which we have kept inside estimated about say 14%. So that are likely to be there.
Okay, got it. Thank you and I wish you all the very best.
Thank you. The next question is from the line of Mr. Jitin Doshi from Axis Capital. Please go ahead, sir.
Good afternoon, sir, and thank you for taking my question. Sir, first of all, can you give us the breakup of equity required in next 3 years? As you said that in FY24 the requirement was almost 407.4 crore. What would be for FY25 and 26?
This is equity total requirement which is around 1,592 crore rupees, 758.7 already invested till June 23. So it's the current year requirement would be in the range of 407 crore rupees once we would be getting the quantity data of all the projects and the balance requirement for all 5 running projects. So that is one. And FY25 it is estimated at about 268 crore rupees and FY26 it is 158 crore rupees.
Sir, you said that the land available for the Karnal project is 86%, while for the Varanasi Ranchi project for both the packages we have got 50%, right, sir?
No, it's package 13 is a bit ahead because the forest clearance for package 10 is there. The majority part is in forest. So in package 10 it is a bit low.
Okay, so you said 50% for package 13 and not for package 10, right?
Yes.
So how much package 10 would be less than 50%? Okay, got it. Yeah. Okay. And sir, on the current outstanding bid pipeline, so can you throw some light on the current outstanding bid pipeline, and when are these tenders going to open, and which sectors, if you can break up?
So of course, I think as we have discussed about MSRDC, almost 45,000 crores, where we would be looking at about where we are qualified for 30,000 crore rupees. This is one big pipeline, strong one, and that's all EPC. NHAI for sure active projects that are on the portal where the bid pipeline are showing about 45,000 crores, and sooner I think more of the projects which are at the DPR stage or the approval is yet awaited from their respective competent authority, they would be there. So these are the two major ones, and then of course NHAI, apart from NHAI and these projects, there are not many projects which we have seen in railways which we are continuously bidding, and metro even we are looking for it.
No, so my question was, any outstanding bid right now which you have participated and you are awaiting the opening of?
5,600 crore rupees.
So that should be in road?
Road is about 3,500 and balance in railways.
So this should open by end of this month?
Probably by this month of August end.
And sir, can you throw some light on the revenue breakup? So as you said that there was a miss in revenue as against your internal target for the Q1 because of the monsoon. So, but you are very optimistic that we should be able to achieve the full year revenue target of 5,500 to 5,600 crores. So what kind of revenue contribution we are expecting from the Adani project, like you had guided for around 2,000 crores at the start of the year, and probably from the the HAM projects?
Yeah, definitely. We have already detailed during the annual Concall that around 2,000 would be coming from this project of Adani. This is roughly 2,000, and then balance majorly Raipur Visakhapatnam corridor projects, HAM projects put together. It would be about 1,800 crore rupees coming from those projects. So this is how another EPC of UER, NHAI, and Tumkur, and then the metro put together would be the total 5,500.
My last question would be a bookkeeping question. If you can give me the outstanding mobilization advances, retention money, and unbilled revenue, debtors, creditors, and inventory if possible.
Yeah, sure. You can see the mobilization advance is about 285 crore rupees.
285, okay.
It's reduced by 70 crore rupees from the last quarter. And the debtors are gone high, no doubt, as I already explained that we have received a significant amount in the first week of July only. So debtors is around 750 plus 225 as retention and deposits. So put together 978.
So you said 750 is debtor and retention is how much? 228.
750 and 228, correct.
220. And what will be the inventory, sir? And unbilled revenue?
Inventory is around 256.
And unbilled, sir?
Unbilled?
Unbilled, sir.
Almost 500 something could be just a minute. Yeah, unbilled is almost as it was last year, last quarter.
Sir, CAPEX guidance, if you can throw some light on the CAPEX.
Rishi, may we request you to join the question queue, sir?
Okay, thanks a lot. Thank you, sir, and all the best.
Thank you.
We take the next question from the line of Mr. Aman Soni from Prudent Equity. Please go ahead, sir.
Hi, good afternoon, everyone. So, sir, my first question would be on the asset monetization. So, in the previous phone call, you mentioned that you will be there will be a reduction in debt for about 350 crores. So, do you have any different number, or by in the next 1 to 2 quarters, how much reduction in debt are you planning?
I think what we have discussed last time, that there would be a likely reduction in the debt, because every quarter there is an outflow of about 55 to 56 crore rupees. The entity due payment and term loan payment is there. So it is likely that 200 odd crore rupees will be reduced by this year end, and then some likely 60 to 70 odd crore rupees would be added because of the new capex during the year. So put together, we would be in a range of 425 crore rupees at the year end. So this is the only...
That will be the reduction of 400 to 450 crores.
425, 450. That range would be there at the year end. So we are not considering anything from this monetization of SPVs.
Okay, this is excluding the monetization.
So that we have not considered, yes.
Okay, but even if let's say consider that once this deal concludes, then also there will be a certain portion of debt that will go off. So what will be the consolidated number, if you could help me with that? What is just a tentative number?
Sorry, I couldn't get your question.
No, so you mentioned that this reduction of 400 crores of debt will be excluding the asset monetization, right?
Correct.
Okay, so if we consider the debt reduction from the asset monetization itself, after that what will be the reduction in debt?
So we are not factored as of now.
Okay, all right, no issues. So my next question would be on the Varanasi, Anshi project. So there were certain news reports which are going on regarding certain issues with the land procurement. So is there work commenced in this project, and can we expect certain kind of revenues in the upcoming quarter from this, or is there any kind of difficulties?
Which project you are talking about?
Varanasi.
Varanasi, Kolkata already is on a fast track. The land possession is, which I am talking about, 50% land is in our possession. Balance within 2-3 months, or rather 4-5 months. Maximum the land of package number 13 would be first handed over, and then followed by 10.
Okay, so significantly from the second quarter, a certain amount of revenue could come in from this project as well, right?
So third quarter or fourth quarter, some portion of the revenue is likely to come from these packages. Concall, we are expecting quarter 3 and 4, so revenue would be coming from this Concall Ring Road.
Okay, all right. Thanks, sir. That's it from my side.
Thank you.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. We take the next question from the line of Mr. Sarvesh Gupta from Maximal Capital. Please go ahead, sir.
Good afternoon, sir. Sir, on this order inflow guidance of 7,000 to 8,000 crore, now I think till now we haven't received much this financial year, and then Q4 is also most likely going to be a washout. So, and you are saying around 5,500 crore is the outstanding bid which is expected to open this month. Assuming that we win maybe 1,000, 2,000 crore from here, what is the remaining sort of a pipeline that is there for you to win further bids in the coming 5 months?
The bid pipeline as per NHAI and MSRDC and other railway or metro projects is already there. This is almost a good number. It's almost 1,50,000 odd crore rupees is there. Out of that, we are targeting to bid around 90,000 odd crore rupees. So there we are looking into that bid strike ratio. If at the historical past we have seen that we will be able to make out at least say 7 to 8% at the bid strike ratio. So we would be able to hit that number.
And this is these are the bids which are expected to be done by end of this calendar year itself?
Yeah, of course. By this year end, we are expecting by quarter 2, 3, and 4. Yeah, out of these 8 months, we are expecting to add these orders, new orders.
Understood, sir. And sir, on the Ganga Expressway, any further updates in terms of your
payments in the project sort of a thing? Is everything on track or are there any?
Since you have seen that we already executed 475 odd crore rupees during the quarter, which is run rate is about 160 to 170 odd crore rupees a year on a per month basis. So this is well on track. We are getting the payment well on time. So just 45 days, maximum 45 days timeline of the payment.
Understood. The new gross block that we had added, which was quite significant in terms of the construction equipment. So is that helping us to sort of improve our margins because of lowering our dependence on outside vendors in terms of your EBITDA margin? Because, now some of the operational costs would have been converted to CAPEX related costs.
To some extent, to some extent it is helping, but not to the larger extent. But definitely these are all the internal strategical backward integration and forward integration which we have done, some operational efficiency improvement through technology. So this is all helping us.
But we are able to do a decent utilization on these equipments?
Yeah, definitely. These are all put to use and we are getting the most benefit. Most of the benefits are coming for that angle only.
Understood. Okay, sir. Thank you and all the best.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Ms. Akshada Dev from Vivo Commercial. Please go ahead.
Yeah, hello. I just wanted to know, the margin guidance that was given was around 15%, whereas the company has been able to do roughly 19 to 20% EBITDA for the last few quarters. Is there a reason you're expecting a dip?
So I couldn't understand your question. So what you are saying is?
The margin guidance that you are giving for the upcoming year, the top line, the 5,500 crore to 6,000 crore top line expectation was 15% margins. Right?
Again, I'm sorry.
Sorry, Ms. Akshada, your voice is not very clear, ma'am. If you are on a headphone, I would request you to switch to your handset and talk.
Yeah, am I audible now?
Yes, now it is much better.
Okay. So the top line expectation for this year is roughly 5,500 to 6,000 crores, right? With a 16% EBITDA margin guidance.
It's roughly 5,500 crore rupees, to be very specific.
Right. And with a 16% margin guidance.
Correct.
So is there a reason that we're expecting a dip in margins? Because you've been able to do roughly 20% consistently for the last few years.
I think it doesn't matter margin with respect to the top line. So all the deployment of the resources, efficiency, operational efficiency, design. So put together, everything matters. It hardly depends upon the top line, 5,000 or 6,000 or 7,000. We are keeping our eye focused that we should be aiming at those projects where the margins are good, and as well as decent growth in the top line can be maintained as a part of sustainability.
Okay. So do you expect the current margins that you received in this quarter, are they sustainable for the rest of the year going forward?
Yes, of course.
Okay. Thank you so much.
Thank you. Participants are requested to use handsets while asking a question. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phone. We take the next question from the line of Mr. Ashish from JM Financial. Please go ahead, sir.
Yeah, good afternoon, sir. So just one question. Has there been any change in scope or increase in scope in any of the HAM or the EPC road projects that we are executing?
Yeah, definitely. There has been some changes. Some 200 crores of variation orders has been issued in 2-3 projects.
Okay. So would it be possible to just break down this 200 crore into the individual projects? Even approximate number should be okay.
Readily, I'm not having this breakup of
Sure.
200 crore rupees.
No problem.
Together in all the NHA SPV projects, it is like that.
No problem. That's all from us. Thank you. Maybe I'll just get in touch with Rajiv sir for the details later. Thank you.
Thank you, sir. The next question is from the line of Mr. Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yes, good afternoon, and thanks for the opportunity, and congratulations on good set of numbers. Sir, what is our CapEx guidance for FY24 and 25?
24/5.
Yeah, CapEx guidance for FY24.
Yeah, we are expecting about, say, 20% year on year. So roughly it would be about 6,500. That number.
No, sir. This is CapEx guidance I am asking.
Yes, CapEx roughly it would be in the range of 100 or crore rupees.
For FY24 and 25, both or?
Yeah.
So same number will be.
Sorry.
For FY25 also 100 crores or more than that?
No, it would be likely the same.
Okay, sir. That's all from my side.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Shravan Shah from Dolat Capital. Please go ahead.
Yes. Sir, what is the trade payable as on June?
Trade payable is roughly around 680 crore rupees.
And you mentioned, sir, retention money is 228 crore. So in March it was 111 crore. So any specific reason, sir, 18 crore?
This Adani project do have the retention money recovery, which is say significant high number is there. So, but then again, we would be able to get this back through a replacement through bank guarantee.
Okay, so this 400 crore plus execution what we have done, so there we 110, 120 odd crore kind of a retention money. Is it my understanding right?
So retention and miscellaneous deposit, there are two kind of deposits. So earlier in last year March number, you would it was roughly around 170 odd crore rupees, 178 rather, and now it has gone high, 50 odd crore rupees, which is within this quarter only.
Okay. And you mentioned because of 2-3 days this working capital has increased. So the date number which is 665 odd crore as on June. So now this should have come back to a 450 odd crore.
This is again becoming back to normal. It's roughly about 450-60 crore rupees, and by the year end we would be having that say guidance number is 425 to 450, not more than that.
Sorry, sir, I didn't get. Can you, if you can repeat the same thing? So
in the 30th, as of 30th June, it was being utilized on the higher number, but ultimately it has now coming back to the normal, and it is in the range of about 425-470 crore rupees. That is there.
Okay. Got it. Yeah. Any sir, again on coming back to on the bid pipeline, so it's to bid for 90,000 odd crore kind of a projects. But any specific, if you want to highlight in next 2-3 months, is there any sign that this much we want to, because just trying to understand that post the code of conduct, is there a possibility in terms of awarding goes slows down?
So by till February 24, I don't see there's a big challenge, but they are also having the big clarity. So by the time the model code of conduct is being introduced or implemented, so there's all orders, they are having ample number of bid pipeline readily, and with a few changes in the at the NHA level, you can all understand that that could not happen that it is but we are quite hopeful, and that would be done.
Okay, and sir, any idea in terms of Bharatmala phase 2, where the it is when it's likely to be
there is no update as of now. Very recently, there is no update.
Okay. Got it, sir. And just in terms of
Sir, May we request you to join the question queue, sir? We have participants waiting for their turn.
Okay, thank you.
We'll take the next question from the line of Ash Shah from Elara Capital. Please go ahead.
So thank you for the opportunity. First question would be, how much amount have we invested in these 4 SPVs that we are planning to sell, and how much are we going to receive in FY24 in total?
So this is altogether 343 crore rupees, and as HG has invested into these SPV, and post monetization it is 531 crore rupees.
But that would also include, that is on the EV part, but how much would be the equity value in the 531 crores?
This is altogether equity only.
Okay, this is altogether equity. Okay.
Enterprise value is roughly around 1,300 crore rupees.
Okay. Second question would be, so in our annual report also we have guided for 20 to 25% from the non-road sector. So do you see any margin contraction in the next 2 to 3 years as we see our non-road sector order book increasing?
We are very selective in taking on the call as far as the bidding in the projects apart from the highway. So we are keeping that intact. So we would not be going very desperately. That's why we are keeping 25% for 3 years roadmap, that gradually venturing out or taking the projects apart from the highways. So I don't see much of a challenge in maintaining the same margins.
Okay. Also, last question would be, can you give the breakup of revenue for this quarter, like price variation and operate O&M revenue?
Price escalation is 71 crore rupees, 47. If you can see the number differently, SPV, they have contributed 500 crore rupees. Adani 2 projects, 494 crore rupees. NHI all put together is roughly around 225 crore rupees. And the rest are all DMRC and small.
Okay. Yeah, that's all from my side. Thank you.
Okay. Thank you.
Thank you, sir. We take the next follow-up question from the line of Jitin Rushi from Axis Capital. Please go ahead, sir.
Thank you for taking my question. So my question is more on the competitive intensity side. So as we have seen, most of the players are unable to win projects in Q1. So what kind of competitive intensity can build up in next 3 to 6 months, and how are we placed? Do we, if at all we are not able to win projects in next 2 to 3 months, do we see any kind of a desperation from our side where we try to grab inflows at a lower margin? Something? Can you throw some light on that?
No, I don't see much of a challenge. Definitely, there are many of the concessionaire contractors. They are full of their appetite. Their projects are they are having a good number of projects. So we normally have seen the correction. Last few months, we have seen that a number of bidders they were all as high as 15, 20, or even in EPC 35, 40. EPC definitely there not much of an improvement is there and not visible even. But in HAM, of course, we have seen that 7, 8 bidders are there ideally. So we believe that is all competitive intensity, or which was at a very high cost-cutting aggression was high, but then it's now cooled down. And we expect that without compromising and without looking into that margin shrinkage, we would be able to add this number of projects, with about 5,000 or 4 rupees of highway projects.
So basically, EPC we still see 35, 40 bidders, while HAM it is 7 to 8, right, sir?
Yeah.
So on the road inflows which you are targeting around 4 to 5,000 crores, this should be mostly HAM, or we will get the mix of EPC also? Or what is your thought on it?
Prima facie, it's 4,000 odd crore rupees we are looking from the HAM projects and 2,000 or that range from EPC. Balance we are looking at from the
other sectors. So basically 2,000 next in others. Okay. That's it for my side, sir. Thank you and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you everyone for bringing their expertise and experience around the table. We appreciate everyone joining us today on the call. Hope that we have addressed your all questions. If you have any other further inquiries, please do not hesitate to reach out to our IR advisors, Go India advisors. And thank you for the participation. Stay safe, stay healthy. Thank you.
Thank you, sir. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.